this chaotic March, I should say, Pauline, that we're coming to an end. Obviously, people are still licking their wounds in some way, but certainly there's been a sea change in bond market expectations that perhaps this banking sort of mini crisis has led maybe central banks like the Fed, even where you are, the RBA, to start pivoting. Do you think that current outlook is going to stick?
Look, it's a very interesting one. Obviously, the turmoil that's happened in the banking market will certainly lead some banks to be a lot more careful as far as lending comes. And that would naturally lead to a tightening in financial conditions, which eventually is what interest rate hikes are achieving. But we might not see that effect rolling quickly enough to see a change in direction in the May meeting for the Fed, for example. So that takes a little while for that to trickle through. But what that means would be that your terminal rate might be lower as a result. So maybe not immediately, but in the medium term, yes, there will be an effect on the central bank's decision.
Pauline, David here. There's been some substantial moves in the markets in recent weeks to reflect your point there on the terminal rate perhaps being lower. Big rally in sovereigns. There's a big drop, obviously, in high yield, and maybe that has to do with the AT1 bond space. Where are the best opportunities right now, given the dislocation recently?
That's a great question, David. No, we are a very conservative fund, so we don't want to be heroes and go, hey, AT1s have dropped a lot. This is where we're going to invest our clients' money. For us, it's about trying to avoid the landmines. And really, when you're looking at the bigger picture, you're looking at recessionary risks increasing. So where we're looking at is avoiding cyclical sectors. We're looking at eventually, higher rates impacting earnings and increasing cost of funding, deteriorating credit fundamentals. So what that means is, overall wanting to be more conservative, and where we're going is really staying at the front end of the curve, as opposed to trying to pick the volatile assets that have sold off.
What is your take on recession? Are the chances of one more likely than not?
Yes, look, it's certainly looking this way. And I would just echo Neil Kashkari's comments over the weekend, about how definitely that's going to what's happened on the banking sector that's raising the odds of a recession. And we're watching that very, very closely, because what's happened is we've had a few issues. Prior to Silicon Valley Bank collapsing, the main questions were, how high are rates going, and are they going to be high enough to tackle inflation? But now we've got, turmoil in the regional bank system in the U.S. We've got a lot of nervousness in the European bank system. We've seen Deutsche Bank overnight or on Friday night drop as far as 15% intraday. And we still have the inflation. Inflation is still here. So, recession, it's really hard to see how we're going to have some smooth sailing and how there's no increase in recession risks.